Gentlemen, good day and welcome to the Q1 FY2024 earnings conference call of QMS Medical Allied Services Limited, hosted by Kiran Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Supriya Madhye. Thank you, and over to you, Ms. Madhye.
Thank you. Good afternoon, everyone. On behalf of Kiran Advisors, I cordially invite you to the Q1 FY24 earning call of QMS Medical Allied Services Limited. From the management side, we have Chairman and Managing Director, Mr. Mahesh Makhija. He will give the opening remarks for the business performance. I hand it over to the call to you, sir. Over to you, sir.
Yeah. Greetings, friends. Good afternoon. A warm welcome to each of you as we convene our inaugural conference call to discuss the results of Q1 FY24. It brings me immense pleasure to have all of you on this call. Before we delve into the intricacies of our financial performance, allow me to provide you a second overview of both the industry as well as our esteemed company. As of May 2021, the Indian medical device market stood at almost around $12 billion. Forecasts indicate a staggering exponential growth rate of almost 42%, propelling it to be a remarkable $50 billion by 2025. Such a trajectory promises abundant opportunities for growth within the industry. On a global scale, India holds the fourth position, trailing behind Japan, China, South Korea, solidifying its presence in the top 20 medical device market worldwide. QMS Medical Allied Services Limited, though incorporated in September 2017, is deeply engaged in the marketing and distribution of an extensive array of medical and healthcare devices and accessories. Our operations are constructed around three distinct verticals basically. First, the medical devices and equipment. Second, the continuous medical education programs, the CMEs. And the third, our latest innovative patient service programs. Our endeavors encompass the marketing and distribution of healthcare devices, complemented by specialized patient service programs that cater to a diverse range of healthcare clients, including clinics, pharmaceutical companies, medical institutions, and not the least but the insurance segment also. These skilled professionals we have almost 110 technicians spread across the nation. These skilled professionals are proficient in conducting a wide array of specialized tests across every corner of the country. Our authority bestowed upon us by the EACME extends to the marketing and implementation of CME programs within the Indian market, enriching the medical fraternity with global perspective. Our brands marketed under both the original manufacturer brand and our own brand key devices, which we have launched, and we have Mr. Kapil Dev as a brand ambassador for these products, find their way to various end users spanning clinics, pharmaceutical companies, medical institutions, and consumers, embracing the dual sales model of online and offline avenues. We possess a well-distributed distribution channel across India and have significant presence in the e-commerce channel such as Amazon and our own site qmsmeds.com. With our products seamlessly categorized into an above-mentioned three verticals, our robust portfolio of around over 600 SKUs proudly serve more than 130 esteemed customers. These highlight the synergy between our B2B and B2C business models. Allow me to delve into our continuing medical education service vertical. QMS extends an array of evidence-based, scientifically rich medical programs that play a pivotal role in updating clinical knowledge and practices of Indian physicians across the country. Our mission revolves around impacting lives through continuous skill development, all under the aegis of the European Academy of CME. Our current game changer is our patient service programs, which will provide unprecedented access to specialized screening tests across the country. These programs will serve as a driver to generate a mindset for preventive healthcare amongst all Indians and eventually drive down the healthcare cost of the consumer. Our team consists of highly trained technicians using US FDA-approved medical devices located across the country and capable of conducting specialized tests, aiding in the detection of macular degeneration, diabetes, myelitis, osteoporosis, and a host of other disorders in their infancy stage. In essence, this escapulates a concise introduction to our business landscape and a domain of expertise. Now, transitioning to the financial performance of the company, I'm pleased to share the FY24 commenced on an optimistic note. Let me now provide you with an insight of our performance during the initial quarters of FY24. In the Q1 FY24, we recorded the sales revenue of 26.04 crores, reflecting a growth of 6%. Our EBITDA amounted to 4.74 crores, showcasing a remarkable growth of 156%, while a net profit surged to 2.46 crores, making a staggering growth of almost 910%. These results signify our strides towards progress and prosperity. Thank you for your keen attention, and I look forward to a productive discussion ahead. Thank you.
Sir, shall we open the floor for the Q&A session?
Yeah, please go ahead.
Thank you very much. Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Tushar Raghatate from Kamaya Kya Wealth Management Private Limited. Please go ahead.
Good afternoon, sir, and congratulations for your good margin.
Sorry to interrupt. Sir, your voice is muffled. May we request you to use your handset, please?
Yeah.
Thank you.
Good afternoon, sir, and congratulations for your good margin. Sir, I have 4 questions actually. Firstly, you have report division like in B2B, QS Med, this education business and Q device. What would be the % contribution and the margins of the same? That would be my first question. And the second would be the margin which you had in this quarter. Are they sustainable and what are the drivers of this margin? Yeah.
Okay. The education business basically, as I said, is education at, the service business basically contributes only 10% at this moment of the turnover, and the trading business is almost 90% of this actually at this moment. Okay. And the model that we are talking about is definitely a sustainable model. It's going to be a consistent performance. That's what we can foresee right now.
Okay. So this Q device would be exactly like what was any revenue from this Q device?
The revenue, it is a part of the trading business model only that we have kept it, but I can tell you we have already sold in this first quarter, we have sold almost 4 crores worth of Q devices products actually.
Got it.
And the margins, if you are asking me about the CAMS and all margins, in the CAMS and the education business margins are very high. It's almost around 50% plus margins.
Sorry, sir, I didn't get the number. What was that?
50% margin.
50% margin, okay. And sir, in the B2B, what would be the margin?
B2B average margin is almost 10 to 15%, sir.
10 to 15%. And sir, we had a capex of near to 200 crore, as I could see in the cash flow. Exactly what is the reason, like, for what we did this capex?
20 crores, not 200 crores. I wish I had a capex of 200 crores, but it is 20 crores.
20 crores. So what this was for?
Yeah. See, the CAMS model basically, now we have almost 110 people, distributed length and breadth of the country actually. We are almost catering to more than 90 different locations and catering more than 200 cities. Now each rep actually has sets of machines under with him where he conducts these clinics in the camps in the doctor's clinics. Now we have machines for like diabetic retinopathy, ambulatory blood pressure machine. We have bone mass density. You have CGMS machines. We have creatinine testing machines. Now all these machines basically cost actually. So the capex which has gone in actually is part of procuring all these machineries for all these people actually for conducting this camps. That is the capex which has gone in for that.
Got it, sir. And sir, marketing would be what percentage of your sales?
Sorry, I didn't get you. Marketing?
Yeah, the marketing expense would be what percentage of your sales?
It's so much. How much was 4%? Though we have kept a target of basically 4%, but at this moment we are just incorporating it 1% actually. From the point of view, if you are talking about, the advertisement and all those things right now.
Yes.
Yeah, so we have just used 1%, though the budgeted is 4%.
Okay. So you're pretty sure on the margins of 17%, near to 17% for this, near to, or I would say FY25, right? If I'm not mistaken.
24 FY.
Okay. Got it. Thank you, sir.
Yeah, thank you.
Thank you. The next question is from the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Congratulations, sir, on a set of good numbers in terms of margins. Just wanted to understand a couple of things. What top-line growth are we targeting this year? And out of that, what would be the year-end split or the split in coming 2 to 3 years of trading and service line this year?
See, trading business is going to grow at the traditional business model of almost around 15% actually. The service business is going to grow exponentially at almost around 50 to 70% every year.
Okay, perfect. So the split will change more towards the service line going forward also. The trading business will always remain and it will always be there. It will be a consistent growth actually out there of around 10 to 15%. Shift will happen for the profitability point of view from the new business expansions and other growth structures. The patient programs and all these things are going to be the big growth drivers for us for that. Okay, perfect. Thank you so much.
Thank you. A reminder to all the participants, anyone who wishes to ask questions may please press star and 1. We'll take the next question from the line of Vaibhav Shah from Cogent Finvest. Please go ahead.
Hello.
Yeah.
Can you hear me?
Yeah, I can hear you.
First of all, congratulations, sir, on good set of numbers. I wanted to understand to the aspect of the business. So at the time of IPO, we were in some discussion with the IITs for some kind of special equipment in our Q devices brand. So
Yes.
I just wanted to understand what is the status of that. Have we started production or marketing?
Exactly. The launch of Q devices, all the products, the BP machine, the pulse oximeters, the nebulizers, all have been certified and endorsed by IIT Betic, Mumbai. All these launches are all certified from these companies. Even the manufacturing plant also, everything, the capabilities, everything, all those things, quality product insurances have been given by them actually.
Okay. So
all the first four products which have been launched right now, all these things have all got their certificates from IIT.
Okay, so our whole Q devices range is certified by...
At this moment, the 4 products have come from IIT.
Okay, 4 products. And sir, in the CAMS business, so as of now, you have around 110 your trainers.
Phlebotomists or field officers, what you will call.
Field officer, yeah. So it's spread across majorly into which region?
All India, sir. We are based all India, absolutely all India.
Okay.
90 cities we have, sir, people.
90 cities. Okay.
Yeah.
And sir, what will be the average cost per resources in terms of the salaries and all?
Average cost is its cost to the company is almost working to around 30,000 rupees.
Okay. and the average billings from the CAMS vertical?
See, we have touched the level, this month onwards, we have touched the level of 1 crore a month right now at this moment.
1 crore a month as a whole in the CAMS.
And it is going to grow,
Okay. And sir, when coming to our original OEM business, so have we done tie-ups with any new manufacturers or any new relations that will be built?
We haven't, we believe in consolidating what we have in our hand at this moment. So we don't want to just take products for the sake of taking. Actually, whatever we have in our hand, we want to consolidate this right now at this moment. So this current year, at this moment, there will be no other tie-ups. We will be just consolidating what we have in our hands at this moment.
Oh, okay. And sir, in this field, what will be your team size of let's say, kind of a medical representative or the person's sales team?
I can't hear you, sir. Can you be more specific?
Hello?
Yeah. Hello?
So I just wanted to know, for your distribution business,
yes,
what will be the team size of your sales team?
My team size, I have around 12 people working on that, sir.
Oh, okay. And sir, a few questions on the margin front. So for the Q1, we have done somewhere around
26.
30. Yeah, somewhere around 18% on EBITDA front and around 10% on the profit PAT front. So is this sustainable or
absolutely sustainable? Absolutely sustainable. And it will slowly increase also. As the CAMS numbers, see, to tell you honestly, we are not even, fully utilizing our capacity of conducting that CAMS at this moment.
Oh, okay.
So we are not fully utilizing a CAMS. I mean, the more the CAMS keep on coming in, the more output that we get, it will definitely, result in increasing actually the numbers only.
Oh, okay. So in terms of
to tell you honestly, at this, we are more focusing on the bottom line in this sense actually.
Great, sir. That's good to hear. Sir, to just continue on the CAMS front, so currently how much test or this sort of things we can do? Like you have around 110 representatives. So they will be doing test, or they will be also having a teams across along with them. Let's say if you are doing a camp for one corporate, and so how many tests a single person can perform in a day? These
are all different. If I tell you, I'll give you an example. We do a 4-hour camp actually. Like I give you an example of diabetic retinopathy. Now this is an AI-based machine which is used of Carl's eyes, which is an US-based FDA approved. So we do a normal scanning of your retina actually. In an average thing, there are almost 15 to 20 patients coming in at a time. And the cost for the camp is not dependent on the number of patients entering that. These are fixed costs that we charge. So there are fixed costs actually. It is so on an average, our sales representative does 2 full-fledged 4-hour camps. Can do 2 full-fledged 4-hour camps actually, and 2 small camps. The small camps is in like what you call is like, putting ABPM machines on the patient, putting the CGMS machines on the patient. These are small camps. This doesn't take more than half an hour time actually. So there are 4 different slots that we have of the camps. It's a morning 8 to 9, then you have a 10 to 2, you have a 3 to 5, and a 6 to 10. So there are basically 4 different slots available to each rep actually.
Okay. And this they perform at your client's premises or anything?
Yes, absolutely.
We don't have any physical premises for this representative?
No, we don't have our own physical premises in hand. I mean, I wish I had that 110 locations, but at this moment I don't have.
Correct. Sir, just last part on the CME front. So, sir, what future you see in this vertical? Like you said for Q devices as well as your OEM business and your CAMS. So, what CME holds for you?
See, CME is basically a standard, business model actually, based upon the contents, the news, discoveries and new insights which keep on coming in the medical industry or pharmaceutical industry. So that is basically transferred to the doctors actually. So that's being sponsored by the pharma companies. We are not going directly to the doctors to teaching them at this moment. That is not our model in this moment. So we say a stable, business model in that actually. I will not say I have an exponential growth, like what I have in my CAMS model and all this, but we have a stable thing going around in that.
Fair enough, sir. And thank you so much for the opportunity.
Welcome, sir.
Thank you. We'll take the next question from the line of Ananya Swaminathan from C Square. Please go ahead.
Hello, am I audible?
Yeah, ma'am.
Yes, so I wanted to know, beyond medical devices and education, do you see any opportunities in other related sectors, such as health applications?
We haven't, thought of that point of view yet actually, to tell you.
Okay, all right.
We have health, we have incorporated a lot of other stuff in this business model. Like we have our own app called the Diti app. Now, which is it's basically a patient's program actually, where we do the handholding for the patients for the full 10 years. I mean, full 1 year for including diet consultancies or every quarterly test and all those things. But that B2C model, we are just testing waters actually. It has gone to the corporates already. We are selling it to the corporates. So that, from that point of view, our entry is to that level at this moment.
Okay, all right. And how do the educational services contribute to the company's, your company's overall revenue?
See, we have the CAMS and services model contribute almost at this moment 10% on the top line, but the bottom line is totally different, ma'am. Maybe by this year end, I can give you an exact figure on the bottom line.
Okay. And what strategies do you employ to drive sales on your QMS Meds, that is your e-commerce platform?
Sorry?
We have multiple digital marketing strategies in place. Leading from SEO to social media awareness to also selling these products on Amazon and other e-commerce channels. So we are not restricted to just QMS Meds.
Okay.
And we are targeting new age retailers. Because as you know, the shift now, there's a paradigm shift in marketing to digital. And we are far more precise and far more targeted with our consumer base also in terms of what kind of devices go with.
Sir, I'm sorry to interrupt you. You're sounding distant, sir. Could you come closer to the speaker?
One minute.
Thank you, sir.
Yeah. So what I was saying was we are targeting new age retailers. So our product category, we are able to specifically target what kind of consumers are capable of buying what type of our products. So it will be very specific marketing.
All right. Also, can you give me details about performance in terms of customer retention?
In my B2B business, ma'am, it's almost like though the company was incorporated in 2017 as a private limited, but as a proprietary, it's almost started in 1994. To now, we have, not lost a single customer till right now.
Okay. And your business projections and expectations for FY24?
See, we have a top line, sustainable top line growth, absolutely.
Okay. And are there any major investments planned for near future?
This current year, at this moment, no. Maybe next again, when we increase the scope of our camps and all that, we increase the spread of the thing, that's where the capex and all the other things will come in. Another side, it's a routine capex business model.
Okay, sir. That's it from my side. Thanks and all the best.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and 1. We'll take the next question from the line of Alok Damani from Shree Capital. Please go ahead.
Yeah. Hello, sir. Good afternoon.
Hello.
Sir, can you please give us online and offline sales breakup?
See, online is basically just started in this on 145 days. And already we have got a star rating for 3 products actually. So I could just say that, we've not even touched on the online business model, not even touched 10 lakhs rupees, technically speaking. We just got in the registration approvals right now. And it is just going up rapidly right now.
Okay. And sir, what's our strategy to expand online business as we currently enter in this market? Can you brief about this?
I'll have Tanay. Can you please answer this?
So currently we are exploring every single channel in terms of what kind of products are hitting what kind of marks. We are already on Amazon and we are looking at multiple strategies in terms of the different types of products that we are hosting. So each product will have its own campaign that is specifically suited for the target market that is around that product. So we have a host of wellness products as well as medical devices. So the target market, the content, the channel of reach, all of them will differ as per the product class.
And to just tell you the figure, it is 22 lakhs on the online sale.
Okay. And sir, how a dealership network across India?
See, we are not going through the conventional dealer network route at this moment. We'll be going through the pharmacy chains, absolutely. That is where the target is. The online target is there, and the pharmaceutical companies' targets are there. That is the channel which we are going to use. We are not going to use in this first year. Definitely, we are not going to use the dealer network channel actually out there.
Okay. And sir, in the financial side, if you look at EBITDA margin is sustainable, so what is the outlook for FY24?
As I say, we are looking at a very sustainable growth this year and hope to maintain the Q1 margins.
So, sir, can you please explain as you enter in online market, the EBITDA margin difference between the EBITDA from online business and offline business?
See, online is just started. As I told you, it's just a month right now. So the margins, it's not the right time to tell you honestly what is an online EBITDA actually margin, seriously. Maybe let me complete the 6 months time in this, or more than that, then I can have a precise, analysis on that actually at this moment. We are spending at one side, we are spending on the marketing on that. Here we are doing that. So it's not and it's just 1 month, 45 days precisely right now.
Yes, sir. Got it, sir. And sir, who are the top 10 clients, sir?
See, we work with the top, 40 pharmaceutical companies in this country. All the top 40 pharmaceutical companies. And the companies like Sun, Lupin, McLeod, Alchem, Integrace, Ipca, all of them are a customer.
Okay, sir. So major contribution from the revenue part of top 10 client, how many percentage it will take?
See, that 80-20 ratio is applicable everywhere, sir. 80% of your business will definitely come from your 20% of your customers. That is the standard thumb rule, and it is applicable in our industry also, sir.
Okay, got it. And sir, who are the primary competitors?
See, it is fragmented, there are a lot, from the CAMS point of view, we don't have technically doing, any other, it's fragmented. We have a small local type of people in that, but nobody, has a concise where we have our own apps, where we have our own people working and all. So I don't think anybody else is doing this type of scale activity at this moment. From the B2B segment point of view, there are 1 or 2 guys who are there again, different like Collateral Medical or 1 or 2 other guys are there. But nobody in the concise, the professional way that we are trying to work in at this moment.
Okay. And sir, one last question. On the customer side, how we handle customer complaints, product recall and or negative review, if any?
On this, if you're targeting from the online specifically, Tanay, can you please answer this?
So we have
online and offline.
So
let Tanay answer online, I'll tell you of the offline.
So in the online space, we have warranty periods for each product that are listed. We have a customer care number that is attached to all our packaging. The minute the call comes in, there is no automation. There is a person who will answer the phone, will address the query, and if a product has to be replaced, it will be replaced. If somebody wants a refund, we will give a refund. Whatever the customer comes first in the online space. So whatever the requirements are, we meet them. In the offline space?
In the offline space, where basically when you have the dealers of 3M, Hine, BPL, or all these guys, companies have their own warranty and guarantee period. So what we do is basically simply replace the product immediately, and then we get the alternative replacement from all the agencies that we have.
Okay, got it, sir. And sir, one last question. Sir, how we manage the supply chain given by that product manufacturer from third-party manufacturer in India?
Okay. See, if you look at the model that we have, we normally stock and sell, sir. We prefer that. If you look at my balance sheet and if you look at the stock statements that I have, almost the stocks, we have the habit. We know based on the inquiries, based on our traditional inputs that we have, what products move, which move, how it moves. And we normally have the habit of stock and sales. So because otherwise, normally the inventory is always a problem, supply chain is always a problem with any of these companies. That's where little cost structure goes on a higher side for us. But it's always better for us, which has always worked successfully for so many years. So we believe in stock and sales.
Okay. And sir, what is your current working capital cycle?
Almost 100 days.
Okay. And sir, is there any threat to our business in future if we see entering new segment and expanding business?
The regulations point of view, that would be there. That is anyway a threat to every business model as such. Other than that, I don't foresee any other threat actually.
Okay. Thank you. Thank you so much, sir.
Thank you. Anyone who wishes to ask questions may please press star and 1. We'll take the next question from the line of Himanshu Marfatia from Sunidhi Securities and Finance Limited. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, any plans for entering to the main board?
Not at this moment, Himanshu. As for let's stabilize where we are.
Achha. Nothing in near future as such?
As for the wheels, we go by the NSE rules.
Okay. Okay, fine.
Thank you.
Thank you.
Thank you. We'll take the next question from the line of Kishan from Hanscure Life Science Private Limited. Please go ahead.
Hello.
Yes.
Hello.
Please proceed.
Sir, wanted to know about your export business and wanted to know what...
Excuse me, ma'am. I'm sorry to interrupt. Your voice is muffled. May we request you to use your handset, please?
1 minute. Now, am I audible?
Thank you.
Yeah.
Please continue.
Good afternoon, sir.
Good
Sir,
afternoon.
wanted to know about the export business and wanted to know what is the growth in the next 3 months in export business.
Ma'am, honestly, unfortunately, we are not in the exports at this moment, so it's zero exposure to exports at this moment, ma'am.
So, are you looking in future to plan to export your products?
Not now at this moment, as I said before also, I would like to consolidate what we have in our hands at this moment. There is enough business in this country itself for us to look into that. Exports, yes, but we don't have the bandwidth to tell you honestly on that at this moment, ma'am.
Okay. And sir, what is the next, what will be the growth in turnover in the next 3 months?
So as I said, we're looking at a very sustainable growth, trying to maintain what we have done in the Q1 actually.
Okay. Okay. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask questions may please press star and 1 on their touchtone phone. As there are no further questions from the participants. I now hand the conference over to Ms. Supriya Madhya for closing comments. Over to you, ma'am.
Thank you, everyone. I thank on behalf of everyone, the management, and with this, we conclude the call. Thank you so much. For
Thank you.
Please just research at kiranadvisors.com.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. Thank you, members of the management. Ladies and gentlemen, on behalf of Kiran Advisors, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.